Alright, let's dive into something that's been bubbling up in the financial world lately, the British pound's recent weakness, even as hopes for a US-Iran deal seem to be on the table. Now, on the surface, this might seem counterintuitive, right? You'd think a potential diplomatic breakthrough would boost market confidence, but the pound is actually drifting lower against the US dollar. What's going on here? Let's break it down. First off, the pound sterling to US dollar pair is hovering around 1.3460, and the immediate reaction might be to blame the mixed signals coming from US and Iranian officials. Trump's optimistic tone about productive talks clashes with Vice President Vance's more cautious, almost pessimistic, take on the negotiations. Personally, I think this disconnect highlights a broader issue: markets hate uncertainty. Even if a deal is on the horizon, the messy process and Iran's fractured system, as Vance put it, are enough to make traders nervous. And when traders are nervous, they often flock to the dollar, which is seen as a safe haven. That's one piece of the puzzle. But here's where it gets really interesting. The pound's weakness isn't just about geopolitical drama. The UK's economic calendar is eerily quiet right now, with no major data releases until the Q2 GDP figures on August 13th. From my perspective, this data lull is a double-edged sword. On one hand, it gives investors a breather to consolidate their positions. On the other, it leaves the pound vulnerable to external factors, like the US-Iran situation, because there's no domestic data to shift the narrative. It's like the pound is in a holding pattern, waiting for something, anything, to give it direction. Now, let's talk about the US side of the equation. The dollar's strength isn't just about safe haven demand, it's also tied to economic data. The recent ADP report showed weaker than expected private sector job growth, and if Friday's official employment numbers confirm a softening labor market, it could undermine the dollar. But here's the kicker: even if the dollar weakens, the pound might not benefit as much as you'd expect. Why? Because the UK's own economic outlook is far from rosy. Inflation is still sticky, growth is sluggish, and the Bank of England is walking a tightrope with interest rates. So, while the dollar might take a hit, the pound isn't exactly in a position to capitalize. Technically speaking, the pound sterling to US dollar chart is holding above key moving averages, which suggests there's still some bullish momentum. But the relative strength index is sitting around 57, not overbought, but not exactly screaming buy either. What this really suggests is that the pair is in a bit of a limbo. The upper Bollinger Band around 1.3544 could act as resistance, but if we break below 1.3407, we could see a deeper pullback. Personally, I think the technicals reflect the broader indecision in the market. No one's willing to make a big bet until there's more clarity. If you take a step back and think about it, the pound's weakness isn't just about today's headlines. It's a symptom of deeper issues. The UK's post-Brexit economy is still finding its footing, and the Bank of England's monetary policy is constrained by conflicting priorities. Meanwhile, the dollar, despite its own challenges, remains the go-to currency in times of uncertainty. This raises a deeper question: how much of the pound's struggles are due to external factors, and how much are self-inflicted? In my opinion, it's a bit of both. So, where does this leave us? Well, I think the next few weeks will be crucial. If the US-Iran deal materializes and the UK's GDP data surprises to the upside, the pound could find some traction. But if either of those things falls flat, we could see further downside. One thing that immediately stands out is how interconnected these factors are: geopolitics, economic data, and market sentiment. It's a reminder that in Forex, nothing happens in a vacuum. What many people don't realize is that the pound's story isn't just about today's price action, it's about the UK's place in the global economy. As the world's oldest currency, the pound has a unique history, but that doesn't shield it from modern challenges. From my perspective, the real test for the pound isn't just surviving the current turbulence, it's proving it can thrive in a post-Brexit, multipolar world. So, here's my closing thought. The pound's weakness isn't just a blip, it's a reflection of bigger trends. Whether it's geopolitical uncertainty, economic stagnation, or market indecision, the pound is at a crossroads. And how it navigates this moment will tell us a lot about its future. What do you think? Is the pound's weakness a temporary setback, or a sign of deeper troubles? Let me know in the comments below.